Everyone keeps asking the same question right now. Is altcoin season coming? And the answer you keep hearing from crypto Twitter is yes. Any day now. Get ready for the fireworks. But I pulled the actual numbers, the on-chain data, the historical cycle timing, the macro indicators, and the picture they paint is a lot more interesting and a lot more specific than any hype post you have scrolled past this week. Because here's what the data actually says. Altcoin season is not here yet. But the conditions that have historically preceded it are quietly falling into place. And if you understand what those conditions are, you will know exactly what to watch for instead of just waiting and hoping. I am Crypto Nomad. Let's get into it. Before we get into the data, we need to agree on what altcoin season actually means. Not the vibe, not the feeling, the measurable definition. The most widely used benchmark is the CMC Altcoin Season Index, published by CoinMarketCap. It tracks the top 100 cryptocurrencies, excluding stablecoins and wrapped tokens, and measures how many of them have outperformed Bitcoin over the past 90 days. If 75% or more outperform Bitcoin, the index scores above 75, and that is officially altcoin season. Below 25 is Bitcoin season. The middle is no man's land. Think of it like a class grading curve. If most students score higher than the top student, everyone else is having a great day. Right now, Bitcoin is still that top student, and most altcoins are still scoring below it. So where does that index sit right now in April 2026? Based on current tracking data, it is hovering in the 30 to 40 range, firmly in Bitcoin season territory. A month ago, it was approaching 50. In early 2025, it briefly touched 70, but right now, it has pulled back hard. And Bitcoin dominance, which measures Bitcoin's share of the total crypto market cap, is sitting between 56 and 60%. That matters enormously because historically, true altcoin seasons have only started after Bitcoin dominance falls below 50%. We are not there yet. This is the first data point. The Altcoin Season Index says no. Bitcoin dominance says not yet. But here's where it gets interesting. Let us zoom out and look at cycles. Every major altcoin season in crypto history followed a very specific sequence. Bitcoin rallies first. Bitcoin reaches a new all-time high. Bitcoin dominates for months. Then capital starts rotating into Ethereum. Then Ethereum pumps. Then the broader altcoin market explodes. In the 2017 cycle, Bitcoin peaked in December, but Ethereum had already started running 6 months earlier in June. The mass altcoin explosion came after Bitcoin consolidated near its highs. In 2021, Bitcoin hit $69,000 in November. Large cap altcoins like Solana and Avalanche had already been running since September. The pattern is clear. Bitcoin leads by months, altcoins follow. That rotation is not random. It happens because investors who made gains in Bitcoin start looking for the next trade with higher upside potential. They move down the risk curve from Bitcoin to Ethereum, from Ethereum to large cap altcoins, from large cap altcoins to mid cap and small cap tokens. Think of it like water flowing downhill. Bitcoin fills up first. When it overflows, the water runs to the next pool, which is Ethereum. When that fills up, it runs to the next one, which is large cap altcoins. And so on. But if the water has not finished filling Bitcoin yet, the lower pools stay dry. So where are we in this cycle? The April 2024 halving was the starting gun. Bitcoin peaked at $126,000 in October 2025. That is roughly 18 months after the halving, which is very close to the historical average of 16 to 18 months from halving to peak. Since that peak, Bitcoin has pulled back roughly 40 to 45% to the $65,000 to $70,000 range. That correction mirrors the double top structure we saw in 2021, where Bitcoin fell from 69,000, recovered, then fell again before the altcoin explosion happened. But here's the complicating factor that makes this cycle unique. The 4-year halving cycle appears to be stretching. When you overlay the ISM Manufacturing Index on top of Bitcoin's price history, a clear pattern emerges. The ISM is a government-published measure of whether the economy is expanding or contracting. Readings above 50 mean expansion. Below 50 means contraction. And historically, every major Bitcoin and altcoin surge has happened after the ISM crossed back above 50. During 2023 and into 2024, the ISM spent an unusually long time below 50. That economic drag appears to have delayed the liquidity cycle by roughly 1 year compared to previous halvings. When you map global liquidity against this cycle, the data points toward a peak window somewhere in the second half of 2026. rather than 2025, as many originally expected. The debt refinancing environment of the early 2020s created a delayed release valve. When that valve opens, and the data suggests it has not fully opened yet, the liquidity surge could be more concentrated and sharper than a typical cycle. Now, let us talk about what on-chain data is actually telling us right now. The first signal is Bitcoin's net unrealized profit and loss, or NUPL. This metric measures whether the average Bitcoin holder is sitting in profit or loss. In late 2025, when Bitcoin hit its peak at 126,000, NUPL was above 50% in the greed zone. As of early 2026, it has declined to around 19%. Historical data shows that a declining NUPL from peak levels is consistent with post-peak correction behavior, not capitulation. This supports the idea that we are in a correction, not a bear market. The second signal is exchange reserve flow. Before major rallies, Bitcoin held on exchanges typically declines, meaning holders are moving Bitcoin into cold storage rather than selling. CryptoQuant data shows that Bitcoin exchange reserves have been declining since the late 2025 correction began. Historically, this pattern has preceded accumulation phases that led to the next leg up. The third signal is the ALT/BTC ratio. This tracks the total market cap of altcoins relative to Bitcoin. In the fourth quarter of 2025, this ratio bottomed out, closely resembling the setup from the fourth quarter of 2016. That 2016 bottom was followed by the most dramatic altcoin boom in history, where Ethereum surged from $8 to $1,400. And XRP rose from less than a cent to nearly $4. History does not always repeat, but it does rhyme. A fourth key signal is stablecoin supply. When stablecoin supply grows, it means there is dry powder sitting on the sidelines, money that is in crypto but not yet deployed into altcoins. That dry powder is the fuel for the next run. Current data shows stablecoin supply remains elevated, which historically has been a precondition for the next rotation. Here's the variable that did not exist in previous cycles: institutional capital. The approval of spot Bitcoin ETFs in January 2024 fundamentally changed the game. BlackRock, Fidelity, and others are now bringing institutional money into Bitcoin that previously had no easy on-ramp. But this also changes the altcoin rotation dynamic. In previous cycles, retail drove the rotation from Bitcoin to altcoins. Retail investors saw their Bitcoin gains, got greedy, and chased higher returns in smaller coins. That still happens. But institutional capital moves differently. It is slower, it is more selective, and it does not chase meme coins. This is why the structure of Altcoin Season 2026 looks fundamentally different from previous cycles. It'll be narrower, slower, and more dependent on macro liquidity conditions and where institutions are choosing to allocate. Not every altcoin will pump equally. The days of a rising tide lifting all ships may be over. Instead, on-chain capital flow data is concentrating into specific sectors: real-world asset tokenization, next-generation DeFi, and AI infrastructure. So what are the specific triggers that historically have started altcoin season? There are 4, and right now, none of them are fully confirmed. Trigger 1. Bitcoin reclaims its all-time high and consolidates above it. We need Bitcoin back above 100,000, holding steady, not spiking and dumping. That is the signal that Bitcoin season is winding down and capital is ready to rotate. Trigger 2. Bitcoin dominance breaks below 52% on a sustained basis. The current level above 56% needs to come down significantly. A confirmed break below 54% has been identified as the key inflection point by multiple analysts this cycle. Trigger 3. The Federal Reserve begins cutting rates. Quantitative tightening ended in December 2025. The market is currently pricing in 1 to 2 rate cuts for the second half of 2026. Rate cuts expand liquidity, and expanded liquidity flows into higher beta assets, which means altcoins. Trigger 4. The ISM Manufacturing Index crosses above 50. This is the economic expansion signal. The ISM tells us whether the broader economy is growing or shrinking. When it crosses above 50, historical data across every major crypto cycle shows that Bitcoin and Ethereum break out first, and altcoin season tends to follow within 3 to 6 months. That correlation is not a theory. It shows up in the price data every single cycle going back to 2013. If and when altcoin season does arrive, which sectors are the data pointing toward? This is where the current cycle diverges from 2021. In 2021, the biggest gainers were broadly distributed. Layer 1 blockchains, gaming tokens, dog coins, you name it. Everything went up. This cycle, the data is showing concentrated capital flows into three areas: AI and decentralized compute infrastructure, real-world asset tokenization, and next-generation DeFi with actual revenue generation. On-chain data points to next-generation Layer 1 blockchains with growing network metrics as the highest potential risk-return opportunities. The framework that the data supports: use real metrics like active users and transaction volume, not hype. Benchmark every altcoin against Solana. If it cannot beat Solana on real metrics, capital will not rotate into it at scale. So let us bring this back to the original question. Is altcoin season coming? The data-driven answer is not yet, but the setup is historically unprecedented. The Altcoin Season Index is in the 30s. Bitcoin dominance is above 56%. None of the four triggers are confirmed. These are the numbers. They do not lie. But here is what is also true. The ALT/BTC ratio has bottomed in a way that mirrors 2016. The NUPL is showing accumulation behavior, not capitulation. Stablecoin dry powder is elevated. And when you overlay the ISM cycle and global liquidity data against this timeline, the window that the numbers are pointing toward is Q2 to Q3 of 2026, when liquidity conditions, Fed policy, and historical cycle timing all converge. If that window opens, historical data from previous cycles shows altcoin seasons typically last 2 to 5 months and move fast. The investors who captured the biggest gains in 2017 and 2021 were positioned before the confirmation, not after it. The difference between catching a wave and watching it from shore is usually just preparation. The data gives you the checklist. Watch the Altcoin Season Index cross and hold above 50. Watch Bitcoin dominance break below 52%. Watch the ISM print above 50. Watch the Fed announce a rate cut. When those four triggers align, that is when the historical data says the rotation begins. Until then, the number that matters most is the one on the Altcoin Season Index. And right now, that number is saying, not yet. This is Crypto Nomad. If you found this breakdown useful, subscribe to the channel and hit the bell. Nothing here is financial advice, and you should always do your own research before making any investment decisions. I will see you in the next one.